Again, y'all, this is our candlestick boot camp. I believe this is day 3, part 2. And we're going to be talking about trading tactics or ways to pretty much enter the market based on candles plus indicators, right? So there's a term that I actually never heard of. It's called congruence. Well, I always say the word congruent. I say that a lot, but I didn't know the technical term for when you check your indicators against what the candles are telling you. It's like when you combine all of your analysis together, your fundamental analysis, checking your news, your technical analysis, and then your sentimental analysis, which is essentially just looking at the candles. So congruence is putting all of those things together to make sure that you have the best entry. So we have been talking about this a while within RTP, but it's just really nice to know the technical terms behind them. So I'm going to go ahead and share my screen once again. And when you guys can see my screen, just go ahead and drop some lucky number sevens in the chat. And we're going to go ahead and keep it pushing. I don't want to keep you guys here forever, but I just want to break this information down for you so that you could become better independent traders. All right, awesome. Awesome. So trading tactics in the candlestick Bible. Oh no, I don't like that. So trading tactics in the candlestick Bible actually fall between pages 92 and well, these trading tactics page 92 and 108. So you can write that down. Well, I'll also forward the candlestick Bible in the RTP chat, in the Cosmic Club chat, once this is done, so that y'all can have it. But again, we're going to be talking about trading tactics and how to identify and trade the trend by candles. So the first one is, typically when I talk about this method, I call this the time-based entry method. And I really want you guys to write this down, right? The aggressive entry option. Okay, and I'm going to read it. It says this method consists of entering the market immediately after the pin bar closes without waiting for a confirmation. This strategy will help you catch the move from the beginning because sometimes price goes higher after the close of the pin bar, and if you are not in the market, the trade will leave without you. Now, what does that mean? Now, typically, depending on which chart you're using, that's going to determine when you actually enter. And I say this all the time on my money mantra trainings. If we are trading on a 5 minute time frame, right, and we see a pin bar candle and the time counts down, right? Again, this is time based where the market, this example where the market sells, we pretty much would wait until the candle closes, right? We would get the confirmations on the previous candle and we would just get into the market as soon as the newest candle starts because, again, we want to have the best entry. Now, pin bars come into play because this is actually your signal telling you that it's okay to go for that trade. So if we're going for a sell, of course, we want to see a bearish pin bar. We want to see that the market has pushed price all the way down. That the buyers basically have, well, basically this side has no power and the other side is really pushing it down and trying to win. You want to see that. And as soon as the newest candle forms, again, if you're using the 5 minute time frame, you would want to get in at, right now time is 8:26 p.m. We would want to get in at 8:30, right? Or if this was happening and we get the confirmation at 8:35, we would just want to get in at 8:35. If you have the confirmation on the pin bar, you just take the trade at the very next candle, right? Because where one candle closes, another candle is going to open. Now, what type of candle that is really letting you know what you should do. So if you see a pin bar, a bearish pin bar, right? The very next candle, you should know you should be able to sell. And if you see a bullish pin bar, you know the very next candle you should be able to buy. And then look what happened here, right? This is called, again, the aggressive entry option. You're not really waiting for many confirmations on your new candle. You're not even waiting for the trend to form on your new candle. You're going off of the basis that you recognize this as a bearish pin bar and you know that the market is going to sell. So let's see if we can actually find one in the market and then see where that happened and see what happened after that pin bar. Let's see. Let's see. Oh, let me put this because I'm using the HFX example. So let me put this on the 5 minutes. All right, so we have one right here. So let's just say that the market was already trending down, right? We would have got this candle, right? But the market is coming out of a consolidation phase, so we don't want to get too excited. But let's just say we had a sell candle, and then we saw this candle form here. We would have known that the market was going for a selling trend, and we would have been able to clear, right? At least clear this trade because it's the very next trade. The point is that if you see the pin bar, right, and you see that the thing is at the top, you want to go for whichever way. So it's the bearish pin bar. Bearish pin bar. You want to go for a bearish sell. I'm gonna look for a bullish pin bar example. I know we see a lot of good buy examples, but the point is to be able to identify these trends based off of the candle alone. Okay, here's another bearish pin bar. And then we see the very next candle was a sell, so we would have been able to clear if we would have gotten immediately. I'm not really seeing too many bullish pin bar. Okay, here is a bullish pin bar as well. And then we see that we've been able to buy the very next candle, and that would have cleared. If we were looking at this on a higher time frame, let's just say we were going to do the 4 hour let's say we're going to do the 1 hour and we were looking for Forex trades. Let's say we got sorry, y'all, I just want y'all to see a very clear example of how this really works in the real market. And again, you'll be able to scroll your chart and do these markups as much as you want, but the purpose is to know that it works. So 1 second, let me see if this is, that's not it. All right, so this is one right here. This little red candle. Let me see if I can zoom in. I'll just put a box around it. This candle right here will be a bearish pin bar candle because you see most of the action happening on the bottom of the body of the candle, which is very small. And then we see after this bullish thing, we actually went up, right? The market actually continued to go up. So if I were to put see how many pips that would be, if I would have got in at the very next candle as soon as this candle closed, and we were able to be patient, we pretty much would have stayed in this trade. Let's just say you stay in this trade you hold it for 6 days. That would have been 71 pips. That's a really weak example, but you can see how that's still a really good signal that the market is going to go the way that you want it to go. Um, and I can see if I can find a sell example, but Euro GBP, it's not really giving me too much. Let's try GBP JPY. Sometimes it's really difficult to find the perfect setup, which is why signals can't be dropped all the time, but this will help you trade better on your own. But if it's making sense, y'all, just let me know if it's actually making sense to y'all. All right, okay, good. All right, here's another good example right here. Right here, let me just zoom in so I don't lose the place. If we were to see this candle forming right there, right, you can go with the blue one or the red one. Well, I would go with the blue one, right? If you would have just gotten on this candle, you would have cleared. Or if you were trading Forex and going for pips, based off of that pattern alone, you would have been able to, let's say, stay in this trade for, if you were patient, about 2 days, that would have been 153 pips. That would have been 153 pips. If you would have been able to stay in this trade for 2 days, based off the simple fact that this pin bar candle formed. Obviously, it was at a resistance level. Let's put a horizontal line there. We can see that that pin bar candle formed at a resistance level because the candles kept testing and testing and testing that area until it decided to sell. So 2 days really could have gave you A whole lot of pips, right? A whole lot of pips. So here we go. The trend, we know that the market was trending down, right? The level, we see that we had the support level become resistance, meaning that that pin bar was formed. And then clearly we see a clear pin bar formed after the retracement back to the level. And that's what we see in this one, y'all. We see the pin bar there, market came back up, and now we know it's officially a selling trend, right? It is a lot to remember, Margaret, but it's the thing is, you can only choose to study one pattern, and you could only look for those patterns in the market and just work with that one thing. And then once you master that, it's like, you know, it works. You really don't have to learn everything and relearn everything. So we give you guys a lot of information, but you can just kind of mix and match what makes sense to you, and not do every single step every single time. They're right there, I think. Okay, Clay said, my problem lies where I don't understand when to get out the trade after a few days. I can't explain it. Well, you should know when to get out the trade because you're doing it based on support levels. Like, let's just say your analysis was done on the 4 hour like this, right? Let's just say your analysis was done on the 4 hour like this. So you come in here, right? And you as yourself as a new trader, you come in here, you mark up the support and resistance levels that you can see. You can see areas where the market either stayed in the trend with a little bit of consolidation, and then you can see areas where the market actually broke out and came down. If y'all see that, what I just said, and understand, the market was in a key level, right? It was in this level for a while, right? And then it actually came out and broke and formed a new level. If y'all can see that, drop a 7 in the chat. Okay, good. Okay, good. Thank you. Thank you. Thank you. So let's say Koya, when you get into the market, right? Let's just say you get into the market right here, right? Let's just say you get into the market right here for a sell, right? But you've already done your analysis, and this is your entry point, and you know the market is going to drop down to here, right? You know the market is going to drop down to here. So let's just say you get into the trade and you do your analysis and you say, okay, it's going to take the market, or let's just stay in this zone right here. Let's just say you know it's going to take the market 6 days and about 8 hours. So about 7 days, right? About 7 days, you should reach your premium just as the previous side. Uh, Can you ask your question again? Because I probably forgot what I said. But let's just say you do your analysis, Koya, and you see that the market is going to take you getting up here, right? You set your pending order because you know that's a resistance level. You're not looking at the market when it happened. You literally set your pending order because you know the market is going to revisit that area because you did your markup. And look, it revisited that area one, two, three, 4 times. So based just on candles, we know that. Look at this, right? We learned about this type of candle, right? We see that the candle is forming at the resistance level. We see a selling trend has started. So if we know that the market did this the first time, right? We know that it took the market 6 days and 16 hours to make that move. We put our pending order at the resistance line. We know that we want to stay in this trade for about 6 days, right? Now that's one. I'm gonna leave that right there, right? I'm gonna do this. I'm gonna leave that right there. 6 days and 16 hours. The market made that move. Now let's just say we can see this on the chart. Let's see how long it took the market to make that move, right? About 6 days and 8 hours, right? So you can assess that if you're looking at your markup on a 4 hour time frame, and you entered up here and you waiting for the market to make that move, you know that the market is going to reach its maximum profit level in about 6 days. So that's when you would get out the trade, right? You would get in on, let's just say, whatever day this is, July 13th, whatever day that was, let's just say that was a Monday. You know that you're going to stay in that trade until 6 days, pretty much. Does that make sense? Like, since you're doing your analysis and you know where the resistance is and you know where the support is, and you kind of you can predict what's going to happen, right? You can look and see that the market is coming down, right, to this support level, right? The market is coming down to this support level. We see the wicks are starting to form. It's getting crazy. Whenever we see the wicks form, we know that it's about to turn around, right? Breaks the level, comes down. Wicks starting to form, wicks starting to form, breaks the level. Wicks forming, right? Wick forms, market turns around. Market had a hard time, right? Had a hard time coming up, right? But we see those wicks, so we know what's going to buy. We see those wicks. Let me delete this. We see those wicks, we know what's going to sell. We see those wicks, we know what's going to buy, right? So this is, and look at this. We see that it's getting to another resistance level, right? And I'm pretty sure if we just do this, right, calculate the pips from here to there, right, we know it's going to take about 6 days, even with no candles there. We know it's going to take 6 days because that's just the pattern, right, y'all? So you get out the trade on how many days it says. Yes, that would depend on your analysis, right? So let's just say we're doing this on a smaller time frame, y'all, right? Let's say we're doing this on a smaller time frame. We're doing it about an hour, which means that we can enter our trades every hour on the hour, right? So what time is this? 8:39. So that means this candle was formed at 8. This candle was formed at 7, 6, 5, 4, 3, 2, 1, 12, 11, 10, 9, whatever. We know all these candles are forming every hour, right? So we can do this, right? Let's make support and resistance. We see that the market has been in this zone for 1, 2, 3, 4, 5, 6, 7 hours, right? We know that if the market gets back to 460, right, 151.460, if we was doing forex, we know if it get backs up to 460 by 9 p.m., we could get in for a sell, right? And we know that if we stay in that trade from this point to this point, which is going to be about 7 hours, right? It's going to be about 8 hours, 7 to 8 hours. We should still be able to get 29 pips on the sell because that's just where the market is at right now. It's going in between this zone and this zone. So we know if we get into this trade at 9 p.m., we shouldn't be trying to get out of this trade until 10, 11, 12, 1, 2, 3, 4 a.m., right? The trade should be hitting this maximum profit zone for that specific particular zone in about 8 hours, right? So it does give you a bigger insight. So let's look at another pair really quickly. I'm just randomly clicking stuff, y'all. I didn't check the news. So let's just say we looking at your GBP NZD, right? And we can see GBP NZD. We see a lot of wicks. This market is looking a little choppy, right? So let's put it on the, no, let's just look at something else. So let's say we were looking at NZD CAD on the hour time frame because it's about to be 9 o'clock. So we would want to know at 9 o'clock, what is a good place to enter and how long should I stay in this trade? So of course, we want to first find a zone that the market is staying in. We need to create that zone with these horizontal lines, right? All right. So that's looking like a real nice zone. That's looking real nice. So we can see that. All right. Sorry, I'm looking for the right thing. So we can see that the market is staying in this zone. It bought, right? It came up here. It broke out a little bit, created a new high right there, right? So we have a high, higher high, right? We have a higher high. This little brief thing that was happening, we have a higher high, right? From what we learned earlier. Then we see the market came back down. It bought, it sold, it didn't come as far down. It bought. We already know that the market it's already past our resistance. So we know that it's fitting to turn around soon. Like it's already starting to sell, but we know that based on where it's at, it has a ways to go, right? Before it starts buying again. It's either going to be here or it's going to be there. So you can see how many pips and how long it would take. Take that, go from here to there. And 15 hours, right? You can see another brief little support level. Let me put a real line there and do this over. So we know we can go from here to there, right? Which is a brief support level, and that'd be 50 pips in 13 hours. We can go to bed and make some money, or we actually know it's going to drop all the way from here if it decides to actually go back all the way down to this zone. It'll be more than 50 pips. right? 75 pips. If you will hold on fold, you can get an extra 25 pips before the market actually bounces off of previous support and repeats that pattern. So what happens if you don't get out of the trade on time? Um, well, it could always reverse, and that's why it's important to understand like what these wicks are telling you. Because let me take these off the screen. So let's just say you were in this trade, right? And if we was going for this trade for a sell, because typically we'll have TP1, TP2, TP3, right? So if we get in for a sell, let's just say we get in right here, right? This is our entry point, and let me just turn it red for a sell. This is our entry point, right? Now, if we expected the market to go down in a downward motion, we would know that our take profit level is going to be at the bottom because TP is where we want to get out the market for a sell. So this would be TP level 1, and this would be TP level 2. Sorry, I cannot draw. All right, we just going to start that thing over because no, right? And then we got TP2, right? So this is our first profit level that we can get in at, and this will be our second profit level. Now, it's not really a matter of getting out the trade on time, but this is what could happen. So if we go from here, which is our entry point, because we see it's a resistance level, every time price comes to this level, except for this one time, it sells, right? Now we can go to TP1 because why? We see that previous candles came to this level and went back up. Previous candles resisted this level. Candles hit here and it bought. So we know that if price comes here, that is a good probability that it's going to go there again. So let's see how many pips we can get there, right? If we take it from the entry point to TP level 1, that's about 45 pips, and it would take 8 hours. Now, what I want you to see, I want you to pay attention to that. That's 45 pips. Now, pay attention to what happens over here. You see this wick on this candle? If y'all see the wick on this candle and the wick on this candle, right? If y'all see these wicks, let me circle it, right? Drop a 1 in the chat. We see these wicks on these candles. Remember, wicks are always telling you what is trying to happen, right? If we see the wicks on the candles, the trade could start going the other way, right? The trade could start going the other way. So instead of it continuing to drop and going here, right, where you could have got 45 pips, and let's just say it did continue to sell, right? If it did continue to sell, instead of getting 45 pips, you would actually be able to take it all the way to TP2, right, which is this level, because we see it's another level of support, all the way to 65 pips. So TP1 is 45 pips, TP2 is 65 pips. Now, let me tell you what happens if you don't get out the trade in time. I just need to write it down. Right? Now, you could have got more money if it continued to drop, but let's just say the market decides that when it comes to this area, remember, y'all, this area, it could either continue to sell like it did before, or it could become a swing. I keep forgetting, a swing level, right? It could become a swing point, right? And it could actually decide to buy. So if you were being greedy, right, and you didn't put it at TP1 at 45 pips and you wanted to go to TP2, instead of it continuing to sell, it could continue to buy. So now, instead of you being 45 pips in profit, this is what will happen, because instead of the market continuing to drop, the market may decide that it only want to go right here, right? It may decide that at first it was going to continue to drop, right? Let's just say it got close to your zone. It got all the way to 44 pips. But then it decided that it wanted to turn around, right? It decided that instead of it continuing to go in this direction, this now became a swing point for a buy. And now you may only get 7 pips, or you may end up here in the negative, right? Can you modify the entry point in case it keeps selling? Yes, of course. That's what we call switching your stop loss to your take profit. Because let's just say this is your entry point at first, the market sells, it hits your first take profit level. Now you can actually move your entry point down, right? You can take your, well, I gotta delete everything. You can move your entry point down. So your entry point becomes down here, and then the market will keep dropping. So your previous stop loss is no longer exists. Your take profit level is now your entry point, and you just keep dropping. So now you close that trade, you got out in profit, and now you would just open another trade for profit level from this level to this level, right? So you would get an additional 28 pips if you did decide to modify your thing. Your entry point would stay the same. You would move your stop loss. You would move your stop loss to where your entry point was at, and then just keep moving it down so you're trailing it. Um, so I hope that makes sense. And then even looking at this, y'all, right? We just put these lines here, but let me zoom in and show you guys what's happening right here. Right? Look at this. A pin bar candle, right? A pin bar candle should happen at your resistance. And if we would have gotten right there, we would have been able to take it all the way from here, right? We could have did TP1 right there. Like I said, that would have been 45 pips in 2 days. Or we could have took it all the way down here. That would have been 70 pips in 3 days. All based off of the pin bar forming at the resistance, right? And here's another one. Look, pin bar forming at the resistance. If you missed that one, you could have gotten right here. Pin bar forming at the resistance. Come with this. See how many pips you could have got? In 7 hours, 25 pips. So if you would have put in $1, if you would have put in $2, that would have been $50 in 70 hours. I mean, seven hours. So yeah, y'all, that's that. And of course, how you use the indicators with this, you just go to the strategy that you like, and you should see that your indicators line up with your candles so perfect. So let's refresh this, because this is congruent. So let me just show you guys that. And then I'll talk about the conservative entry option as well. So again, confluence, I'm saying the wrong word altogether. Confluence happens when the technical indicators generate the same signal. Now, in this case, instead of starting with, all right, what color is your candle, which is typically the question that I ask when I'm trading, the question that you start with, what shape is my candle, right? And then you want to find indicators that align with that shape. So if you say, okay, my candle is a pin bar candle, the next thing you want to do is say, okay, is this candle forming at the resistance, right? And let me just show you guys what I mean. Now, the best indicators to me that highlight support and resistance are going to be pickpocket or simple scalper. So let's just go to simple scalper, the original, because it uses Bollinger Bands, or any strategy that uses Bollinger Bands for the most part. So pretty much I'm just going to zoom out, and I'm just going to find, right, a pin bar candle forming at either my support or resistance level, just to see if the indicators confirm what we can actually see with our naked eye, right? Let's see if this is true, if they're telling us the truth. So here's a good one, right? Here's a really good one, but I'm gonna find a better one. That one is really great, actually, but I'm gonna find a better one for y'all. And let's put this on the 4 hour. Let's get jiggy, right? All right, so here we have a beautiful pin bar candle. So typically when I'm teaching, I'll ask you guys, okay, what color is the current candle, blah blah blah, but all those questions, right? Now if you're using this strategy, you will ask yourself, what shape is the candle, right? And we would say, okay, that's a pin bar candle. Now we know that with the Bollinger Bands, let me just zoom out, right? I love the Bollinger Bands so much because the Bollinger Bands literally act as support and resistance, right? The Bollinger Bands act as support and resistance. And if, again, your candle is forming at the resistance, that's a great confirmation. So let's just zoom back in. Now, most of the time, candle activity is not happening outside of the Bollinger Bands. And when it does, you know that the market is going to reverse. So if you see a candle, right, forming on the support line or on the resistance line, you know that that is pretty much like an 80% chance of reversal, which is pretty good. So here we go. Pin bar candle right there. Now let's get into the rest of our technical indicators to confirm that if this is actually true. We see the pin bar. That's indicator number 1, or the signal, as the Candlestick Bible calls it. Now, indicator number 2 is we see the candle forming at the resistance. Right? Indicator number 3, let's zoom out a little bit. We see the candle forming under the 200 EMA, right? And if the candles are forming under the EMA, market is going down, it's selling. If the candles are above the EMA, market is buying. So we already got 3 confirmations in our first window alone on this is a selling market, right? This market is going to sell, right? And we're going to see what happens, right? We're going to see what happens. So we got that. We got that. We got the red bar, right, telling us that the volume of the sellers is actually pretty decent and the market is going to continue to sell. Let me zoom in a little bit. There we go. So we looking at this candle right here. So we got all the confirmations, the red volume bar, and then look at that. We got the cross down. This is so important. Whenever this stochastic or RSI line, whenever these lines cross above this red line right here, that's letting us know that there are way too many buyers in the market. As we can see, that was true. There was a lot of buyers in the market, and the sellers had to get the market back to equilibrium, pushing it back into a safe zone, right? And then vice versa, when you see that you see your pin bar candle down here, right near the support. We see the candle. We see it near the support. We see that the market is oversold. There was a lot of sellers in the market, right? It's oversold, but it has to buy again, and that's what happens, right? So let's see, by recognizing this pattern, how many pips we could have caught if we would have rolled the market from here all the way down until it actually decided to turn around again. Once we see that a new type of pin bar candle form, right? Let's go down. So again, this is in 6 days, but that would have been 123 pips. Now imagine if you have a larger account size and you're using a standard lot, right? A standard lot is $10 per pip. How much money would you have made in 6 days only by risking $10 per pip? Somebody tell me, right? This is 123 pips with a $10 lot size. How much did we make in 6 days with $10? And remember, y'all, this is all simply just based on candles, right? And you're using the candles to confirm, you're using the indicators to confirm what the candles are telling you, right? Now, let's say for the impatient trader, right? Let's say if you want to analyze your chart on an hour time frame, of course, you want to zoom out. You want to look for those candle signals to make sure you get the best one. And let's see if we can find one. All right, perfect. Look at this. Beautiful, beautiful, beautiful setup. Look at this. Look at this, y'all. We see a bullish, right? We see a bullish pen bar candle, right? That is indicator number one that we should be looking for a sell. Number two, if we're going to use our indicators, the bullish pin bar candle has crossed the resistance line, right? Pips are market movement. Like if I say it's 65 degrees outside, degrees is the weather. If I say a car is going 65 miles per hour, that's the speed. If I say the market moves 65 pips, that is just the market measurement. And it's how much money you can make based on how much you actually risk. So let's just say we get the pin bar candle here, crossing the resistance line. That's two indicators, right? We get, well, we will be selling on the next candle, but we would get the crossover, right? So that's one indicator, two indicator. The bar is blue, but that's okay. We get the crossover, 3, 4. We still have 4 indicators to get into this trade, right? Now, if we would have taken this trade just off of the pin bar candle alone, even though it was blue, right? Let's see how many pips we would have got if we would have just rolled the trend all the way down, right? In 3 days, $68, right? $68 if you risked $1. If you would have risked 10 cents, you would have made $6.80, right? Now it may not seem like a lot, but I always say this: I've never picked up a dime off the ground, right, or in my house, and it just turned to more money, right? So even risking the lowest amount of money that you can risk in MetaTrader 4 at 10 cent, you still would have made $6.80 by understanding this candle pattern, right? So the indicator that we focus on is the pin bar candle and any indicator on the strategy that you're using, and then you get your candle. Now remember, let's just say if we were using the aggressive entry method, this would have been perfect. As soon as this pin bar would have closed, we would have gotten for this perfect flat top red candle. Now flat top candles are amazing to see, and just giving you the confidence and knowing that the trend is most likely going to continue that way, right? So that's a beautiful little sell. I'm gonna just see if I can find a buy. Oh, look at this. This is so perfect, y'all, right? Look at this, right? So we would have got this candle, right? It would have been the red candle, red pin bar candle. That would have been confirmation number one that the market is about to buy. Then we would have saw that it was crossing the support line, which is the bottom Bollinger Band. We would have seen that the market was below, right? The market was actually below the EMA, but on the very next candle, mind you, when we got in for the buy, we would have been in profit, right? Because we would have had the red candle at the support line. We would have saw that the market was oversold, right? Meaning it's too many sellers in the market and buyers have to come and take control. We would have did an aggressive entry as soon as this candle closed. Our entry point would have been down here, right? We would have actually got into the trade down here, and let's just see how much money we could have made if we would have hold, not fold, right? We could have stayed in for 17 hours with 63 pips, right? Or we could have stayed in even longer because it went up even higher and got 77 pips in 1 day and 8 hours, which is not bad. Because again, if somebody's using a dollar, you're risking a dollar, you're making $77 off that $1, and it only took a day, right? Now, some people can do that doing DoorDash. Some people can do that doing whatever, like whatever. But you can also do it just by knowing how to look at this chart and understanding that a certain candle shape is going to make you money. Like, I think that's the most shocking thing to understand is that knowing what these rectangles and these lines and colors are saying is what's going to make you a lot of money. Um, so yeah, guys, that pretty much wraps up my training for today. This was pretty much all about knowing how to spot market structure with your naked eye, knowing how to use the wicks, and how to identify a pin bar candle, not just by itself for market reversals, or pullbacks or breaks or just different market trends, but how to actually use it for entries, whether you're using Forex or HFX. We also learned about confluence. I kept saying congruence. And confluence is backing up what you can see with your naked eye from the candles, backing it up with those indicators. So if you're not sure, just know that you don't have to understand every single thing that the market is doing. You don't have to understand every little thing that the market is doing. Find one candle pattern that you like throughout this week and only look at that and stick with that. Like, I didn't even know pin bar candles was so lit. Like, I'm really about to start holding my trades even longer based off of that pattern alone. Because I'm typically analyzing the full candle. And I'm not looking for certain candle patterns, but now that I can identify them thanks to this boot camp, I'm going to be using them more in my trainings. And I've been dropping a lot more signals lately because I have been practicing, even the things that I've been learning. And as y'all can see, it's been working out. Um, if you guys have taken any of the trades that I've called since Sunday, right? All these trades have either hit TP or are still in profit. Just drop some sevens in the chat. Thank you, Maisha. Just drop some sevens in the chat if you've taken any trade I've called since Sunday and you've made money from that trade, right? I know L, you are heavy on the hold on fold right now. I'm so happy for you. So it's important to understand these things, y'all. So don't get overwhelmed, don't get stressed out. Just know that you just gotta find your groove. And it's a lot of information, but once you find something that clicks, that may just be the thing for you. Right now, you may not have known anything about the business. Indicators, strategies may still be throwing you off, but now you actually understand what a doji candle is. Just use that doji candles plus indicators and you are good. You may understand what harambe is, right? Just use that and be good. Now that you've found your thing, use that thing. You can continue to learn and continue to learn, but build around your foundation of what you actually understand. And stop trying to learn everything because it's just going to throw you off. So that's it, y'all. I can't believe I just talked for 2 hours, but I'm glad that y'all was able to learn something, and I can't wait to see everybody's profits because it is withdrawal Wednesdays, and the market is still very much open until Friday 5 p.m. So dive in, and I will catch you guys tomorrow at 10 a.m. for another money mantra training. But